Good morning, everyone, and welcome to the Women's Commercial Finance Forum Sponsor Spotlight session. That is a mouthful to get out early in the morning. This is our second session, so we reached out to our community and we got some really strong feedback that you'd actually really like to hear from our sponsors and talk about their product and actually how you write a deal, how you shape a deal, what's within appetite, and really getting into some product detail. And so we're very lucky here at the forum to be supported by some amazing lenders and service providers within our industry. And today we are joined by none other than ScotPack Business Finance, and you will see them highlighted across the next 10 weeks as they actually talk us through their range of products that they have. But today I'm extremely lucky and blessed to be joined by Erin Bleasdale, who is a BDM for ScotPack's Asset Finance Solution. Good morning, Erin, and welcome.
Good morning. What an intro.
Oh, well, you deserve it. And you're the first cab off the rank. So all of your colleagues are going to follow around debtor and unsecured lending and those sorts of things. Mate, they're going to have big shoes to fill. So you're going to nail it today. The format for today, everyone, is that Erin is going to take us through a presentation on ScotPack, just briefly touching on all of their solutions and then really doing that deeper dive into asset finance. So, and then at the end, we're going to have the Q&A session. So please feel free to use the chat function to put any questions in there at all. And obviously you will have all of Erin's contact details. So if you do need to reach out to Erin at the end of this, please feel free to do so. Or if you haven't quite captured the details, come back to me and I'll certainly do a nice warm introduction to Erin. So I'm in the driver's seat of Erin's presentation. So I'm the one that's going to get bossed around if I'm too slow or too quick on the slides. So Erin, I am going to share your presentation now and hand over to you. So let me jump in here. And if I make this full screen and go to slideshow, hopefully that's exactly what you need to see. Are we right?
Perfect. Perfect. Thank you.
Brilliant. Over to you.
Thank you. So again, my name's Erin Bleasdale. I'm the Asset Finance BDM for ScotPack. I'm a mum of, let's call it 6 kids, two of my own 4-step kids, ranging from 10 to 18. Been at ScotPack just under 3 years. And have enjoyed the journey, but been in finance going on 25 years. So who is ScotPack? Established about 36 years ago with a very strong focus on debtor finance and trade. They introduced asset finance about 6 years ago. So ScotPack is about fast, flexible funding from simple, small, large startup cash flow lending, but ScotPack is one of the largest non-bank lenders in Australia, looking to help that long growth SME to larger scale funding, as little as 10,000 right up to 150, just as you can see on the screen. So ScotPack is in most capital cities in Australia, but also we have offices in New Zealand and China.
Oh, excellent. China, Erin, I didn't know that. That's great.
Yeah. Which supports our trade finance guys. DF and trade, you'll go through those products, I suppose, and of course unsecured funding in a few of the later sessions, but I'll just touch on asset finance.
Absolutely.
I'll get you to flick to the next slide. So
go.
again, very similar to what I said, that ScotPack is pretty much scalable funding as little as 10,000 right up to 150,000. Some of our funding lines, we can have access up to 24 hours. We do assist startups, as I said, cash flow funding, and as I said, large to small startup and really that growth stage. Get to flick to the next one. So key industries that we look at, from labour hire, manufacturing, transport, wholesale, importers, over our suite of products. So here we go. So this is our suite of products from invoice financing, trade, which Mags will go through in, I'm not sure which session. Then you've got our boost loan, and then you've got which Brooke will go through, and then asset finance.
Which is all on your shoulders today, mate.
So different clients in different segments. We really look after that B2B transaction client. So here's some of the I suppose key functions that you can look for or needs from a client, from buying equipment, wages, funding a contract, etc. Okay, benefits of asset finance. So depending on the actual transaction, we can look at funding 100% of the purchase price of the asset. We do new assets, private sales or secondary. We can look to using the trade product to actually fund assets coming in from overseas and then taking it out with asset finance. We can also look at capital raising, subject to the actual purpose or the need for the client. We have probably two sort of streamline products at ScotPack. One we call our fast doc, which is our low doc or alt loan, which we allow for an exposure up to 300,000 with your primary asset per contract 150, secondary asset at 75. We do look to make sure it's a tool of trade. So with passenger vehicles, it must have a clear tool of trade, must be trading for 2 years. And we can see evidence that they've been trading for 2 years, GST registration. And then we've got some benchmark scoring for property backed at 550, our commercial score, non-property backed 622, but we are looking for a 10% deposit. Our full doc, again, this is full financials. Our probably niche in the market for that particular one is our startup. We look at cash flow funding supported by WorkSource and contracts. We need to understand the cash flow, get the actual assumptions and calculations behind the cash flow to get comfortable with it, and we're able to support a new ABN or even a ABN in growth that may be looking to bring on a new work source or contract into their business to be able to support that.
Yeah, that's really interesting. So is there a deposit required on the full doc?
Yes, so depending on the actual deal, if it's an existing client or if you're looking at a new ABN, so new ABNs, we would require deposit being property backed and non-property backed. Non-property backed, if it's just a work source or intent for work, you would actually need a larger deposit versus actually a contract from a blue chip entity with a client that's probably property backed with a bit of equity behind it. So deposits can range from 10% right up to 30%, depending on the risk and the actual strength of the transaction.
Yeah, got you. So not so much, based on tenders, but if they've got a contract of works that's about to start, they are a solid, individual as far as credit score, property backed, etc., then you can support them very early in their journey with a bit of a deposit. But if they're not property backed and there's not, the full level of comfort there that you need, then that it doesn't mean that you won't write the deal. It just means that you may require more of a deposit.
Yeah. So it's actually got to make a commercial sense for us to back the transaction. So experience in the industry, say if they've been PAYG, take it very simple. For a logistics company for 5-6 years, they've actually received a contract or a work source from that employer. They've been working for them. Unfortunately, they're not property backed, but they've got the experience. They're dipping their toe into being owner driver. That actually makes sense. We can see that they've been employed. They've got their license. They know the work source. We can get comfortable with the transaction. However, given it is a new ABN and there's no historical, we will look at the cash flow forecast, get comfortable on serviceability using that. The assumptions, I suppose, the support in the work source of the income. Does the expense make sense? and get comfortable with that. However, it is a riskier transaction, so we may ask for 20 to 30% deposit here.
Yeah, look, and that makes sense. It's all about having an option, right? So
Correct.
as opposed to, typically sometimes in that particular space, it's a 50% deposit. You have to be property backed. So you find that, it gets tougher. So it's nice to know that there's some flexibility around that full doc for new businesses as well. And I can see a couple of questions coming in around new business. So it's always, as soon as someone says we can fund startups, everyone's like, oh, really?
Yeah.
What can you do? So we'll come back to
100%.
those.
So that's what
Yeah.
I always say are probably niche in looking at a new business, a startup. But, we need to obtain a lot of information around the individual, their experience, and then information also on the work source. So understanding the work source, how long they've been in business and what their strengths are and why this individual would want to take a particular work source or contract with them.
Yeah, 100%. That makes sense.
So in general, our full doc is application form, 2 years financials. So at the moment, we're asking for management for 24, financials for 23, A&Ls for the director, because we actually want to understand their strengths, commitment schedule, of course, to do serviceability. So if there are other commitments, if they're an existing business, and we are asking for ATO portals at the moment. So we accept people do have tax debt. That's sort of the environment we are in now. We like to see them on arrangements. We like to see a certain percentage under turnover, but we do count that ATO arrears or payment plan as part of a commitment and make sure serviceability is there.
Yeah, that's brilliant. Here comes another question. It's going to be good. You're going to have a hot question seat.
They're the 2 topics people always touch on, new ABNs and ATO debt.
Absolutely. Did you want me to move on to the product matrix, or do you want to talk a little bit about why ScotPack, why consider ScotPack for the asset finance solutions, aside from the product nuances that you've spoken about?
Yeah.
What are some of the other benefits of working with the team at ScotPack?
So technically, I'm open to working with any brokers. We've got almost 2 BDMs in every state that can actually assist. So they're there to workshop. You also have access to our credit team. So if you do have questions or you do need to work through an application, the credit team is happy to have a conversation and actually work with you, which I think is important than me being the third lay. But I'm here to support the brokers in actually getting applications done. So at the moment, we've moved to 24 to 48 hours turnaround time on our full docs. Our fast docs are still, you get automatically approval when you put them on the portal, subject to, I suppose, credit review, making sure it hits those marks that we're looking for, those benchmarks, and AML and risk.
Gotcha. That makes sense. And we've got another question about funding import of assets from overseas. So we'll definitely talk about that trade to EF or asset finance loan when we get to the end, because I think it'll spark some more questions from others as well.
I suppose one thing I will touch on, the asset needs to be in Australia for us to fund it on asset finance, but definitely our trade finance will support the actual client bringing it in. And we can work hand in hand with the trade team, given that we're on the same floor. And it makes it very comfortable doing those 2 transactions together, because it gives comfort, I suppose, to the trade team. If the asset finance is approved, it's definitely a takeout and it's a mitigation.
Yeah, that's true. And it's nice that even though sort of, you operate in your own specialties, that you do, obviously the team at ScotPack work across product deals all the time, right? I'm assuming. Yeah. All right.
So again, this is probably our product suite, which we're always expanding. We've also gone into property. So we've got invoice financing, which Mags will run through. Boost loan, which Brooke will run through in another later session. Asset finance, so we do chattel mortgages or equipment loans up to terms of 60 months. New assets, we really look at balloons. Unfortunately, second-hand assets, we don't, but it really depends, primary, second, and actually the risk of the asset. New, I think we've already crossed on that. ScotPack predominantly looks at primary and secondary assets. That's probably our forte. And we look up to 1 to 1.5 million per ABN. So that's not a group limit, but that's an ABN. Anything above and beyond that, we're really looking for, I suppose, cross product. So debtor finance, as I said at the beginning, is our core product that we've been able to fund much larger deals, and you would have seen that in the beginning of the slide, up to 150 mil in debtor finance. When you're sort of starting to talk those limits, we can support asset finance with much larger limits. Funds, our settlement cut off every day is 2 p.m. So we have the team that are on it every day and turn around the settlements quite quickly.
Yeah, awesome. What's typically the time limit? Like I know you said, you can get an approval subject to credit and that sort of stuff, but where sort of are your SLAs sitting in asset finance at the moment?
So fast doc, we'll still be able to turn around in 24 hours. Full doc, because we need a little bit of a credit assessment, really depends on the queue. As I said at this particular point, we've actually lowered our rates. Our full doc rates actually start from 8.5%. We have add-ons depending on the risk of the transaction, but that particular team is already picking up deals within 24 hours. So I had one submitted late last night. It's already been approved this morning and already in doc prep. So we can turn them around quite quickly. Fortunately, when it is a little bit more complex or has multiple products, there's going to be a longer time for review.
Yeah, absolutely.
Trade finance, I think also Mags is touching on that, and cash connector.
Yes, absolutely. Case studies, love me a good case study.
Case study. So this particular case study, you actually see that it's got a 15 mil limit, and this is where I said we could probably support a much higher limit when it's actually got a suite of products that ScotPack offer. So this particular case study, 15 mil asset finance, trade 10 mil with debtor finance or invoice financing 40 mil. So I don't know if you want me to run through it, given that
I mean, I know it's there, but I think it's really good for people to sort of understand how the products can tie in together and how, you can provide that whole of wallet solution when it's needed. Often people will choose to have funding elsewhere to not have all their eggs in one basket, but sometimes that whole of wallet and whole of wallet solution is just absolutely a game changer for businesses. So yeah, it'd be great if you could talk through it.
Yeah, so this was, I suppose, the client was targeting new opportunities, domestic and exporting markets. They had a particular need for asset finance, I suppose, locally, trade for that, I suppose, domestic and exporting markets, and then invoice financing for their, I suppose, cash flow needs, particularly in COVID. So this was a particular case study that had I suppose, demand surge in regards to products during the actual COVID-19 sort of, and the team was able to come up with a tailored solution for them to, I suppose, purchase goods, ongoing cash flow, and then I suppose helping with their CapEx requirements.
Yeah, absolutely. And the asset finance piece of that, what sort of assets were you funding there? Like, was it containers or trucks or?
So this would be, I suppose, transport for them to actually move around their goods, and suppose more domestic sort of assets coming in.
Yeah, got you. Like from port to delivery.
Yeah,
Port.
some of it include also CNC or manufacturing, because this was actually a food processing acquisition. So we do look at acquisitions as well. So if you've had a particular entity purchasing another entity and there's actually equipment as part of that, that can also be a funding solution.
Yeah, okay, awesome. So obviously from there you can see that, when you're dealing with an exporter, particularly, an export importer, that having that trade and debtor piece combined with them being able to raise capital against assets or purchase new assets, depending on what that scenario was, fills the whole cash gap cycle for the client. Because it obviously allows them to do what they need to do internationally, service the domestic market as well, and then obviously have their financed asset, their assets financed over a longer term. All right, let's have a look at this one.
So this one was a private equity acquisition of a marketing leading business. So it was a private equity firm targeting acquisition of a marketing lead, refrigeration and warehouse business expansion. Object was to double margins throughout, I suppose, effective like market share, capture growth, growing in the ready meals and fresh food. Requirements was, I suppose, capital, which was the invoice financing for cash flow, and ongoing working capital also to support, I suppose, the new invoices and growth of the business. So the opportunity, I suppose, for Scott back here to help this client was to leverage plant and equipment to support 100 mil debtor finance and 50 mil asset finance facility. So I think, yeah, 150 mil, sorry, and 50 mil of asset finance. So supporting PE firm to fund the acquisition of the business, capital expenditure and ongoing capital, strong cash flow to support the company's growth and ambition to grow. So
yeah, that makes sense.
Yeah, it was a solution for the whole company to purchase and ongoing cash flow support.
Got you. Now, these have been two stellar case studies from a size perspective.
Mm-hmm.
Not all brokers will come across, or members of the forum will come across transactions of this size. Some will probably never. They'd love to, but some of us just don't see that sort of deal. Where's the sort of sweet spot for Scott Pack's asset finance? What's the minimum size loan that you can do for asset finance?
Minimum's 30,000, as I said before, and maximum, I suppose, as a standalone ABN is 1 to 1.5. If they have a asset holding entity, multiple entities, we can look at, as I said, 1 to 1.5 per ABN. And however, we'd be probably looking for guarantees, cross guarantees, if it's a group servicing.
Yeah,
so we can still review the, if we're looking at multiple entities, we'll still do the serviceability as a group, but our funding requirements, it's per ABN.
Gotcha. That makes sense. Thank you.
So identify current opportunities at the moment. So again, Mags will touch on the cash flow and Brooke on the unsecured. So falling behind in tax debt, we can do capital raises against unencumbered assets to actually pay out ATO debt. It's just got to make sense. There's got to be serviceability. But also it may also qualify for debtor finance to leverage that. Outgrowing their current facilities, they have CapEx requirements, or they need to turn over their assets or their fleet. That's another sign. Or they're taking on new contracts, and this is very much leading into that cash flow lending.
Yeah, got you.
Partnering Scott Pack, as I said, I think we touched on it a little bit earlier. We have a diversified range of products that suit that SME to growing business. We really look after the client that is that B2B transaction, and I suppose we're locally based in Sydney and other multiple cities around the country, and have BDMs in each state to be able to service the broker firm to support those applications.
Perfect. And do they have to be accredited with you? Is it only aggregate, through aggregator relationships, or can it be one-to-one broker relationships? How does that sit with you guys?
We definitely love our aggregators to be involved. So we do have a partner portal that we actually ask our applications to be put through. Please reach out if you don't have access to the partner portal. I'm happy to also send you training sessions or sit with you to go through the portal. I've been told it's probably one of the easier portals to use. Fast doc takes about 5 minutes. To submit a full doc, it takes about 10 minutes. You pretty much attach the documents. It goes straight into the credit queues.
Awesome. That's good. And obviously, is the credit team centralised?
No, we're spread out. I suppose that stops, if there's public holidays and those sort of things, it keeps things moving. So we do have some credit in New South Wales, from Queensland to Victoria, even over in WA.
Yeah, that's good to know. People are always, stirring up Queenslanders about how many public holidays we get. So it's good to know that there's support all around the country. So referring opportunities, just talk us through this
Yep.
one.
So it's pretty much spot the opportunity if you've got a live deal on your desk. As I said, all the BDMs are very open to workshopping the deal. So if you're not sure the particular asset, or if there's some niches or quirks to the deal, please give us a call. Automatic accreditation for a lot of our aggregators. So if you're unsure, please reach out, and we will keep you informed at each stage. So as soon as a credit analyst actually picks up a deal, they'll send you an email letting you know they've got the deal, and they would be in contact very shortly.
Awesome. And that auto accreditation, I know that's really important, and we've seen some lenders start to move forward with that, as far as if you're a member of an aggregator whose panel you sit on, then because they literally have to give up their firstborn to the aggregator to be accepted anyway, that then, us as lenders will just say, okay, great, as long as it's delivered via the accreditations team to us, then you're accredited. Is that similar with how you guys roll with auto accreditation?
So we'll send out the link. We'll ask who your creditor, your aggregator is. And if it is one of the ones on our panel that we're very comfortable with, you'll get automatic accreditation. So you can have access to the portal within a few hours.
Yeah, that's brilliant. That's awesome. And the partner portal.
Yeah, exactly what I was saying. You get instant approval for asset finance on our fast doc. Full doc, you'll come straight through into the credit queue. Fast doc, again, it has to hit those benchmarks. There's a lot of marketing tools on the portal. Our updated rates are on there. Again, you can do quick quotes. So if you want to play around with brokerage, increasing it, decreasing it, or doing quotes with different terms from 48 to 60, it's a great tool and an easy tool just to play around with. I can also shadow a broker when they're actually doing a transaction if they get stuck. So again, the BDMs are here to support the brokers working through the partner portal.
Yeah, brilliant. And so brokers have got the opportunity to flex that comms to work for the customer. So obviously if they're trying to support the customer, and they want to drop their comms to make sure that the client gets a good rate and something that they're comfortable with, they can do that. If it's a lot of work and it's a complex transaction and they want to flex up, they can do that too.
That's correct. And then if they're playing around with different assets, so aged asset over 10 years versus under 10 years, because there's loading for that, they can actually see that and say to the client, well, if you buy an older asset, this is what your repayments are looking for. If you're actually buying a newer asset, this is where you're sitting in the market.
Yeah, got you. Brilliant. I've heard lots of good things about the partner portal, so that's awesome.
Again, there's my details. Please reach out if you have any questions. If you need my mobile, I'll probably pass that on because it's probably a little bit easier, but that's probably diverted to my mobile anyway. I'm here to support any of the brokers in New South Wales. I've also got Jerome in New South Wales. But please reach out if you want a workshop or just catch up for a coffee and just chew my ear off if you're sort of dipping your toe into asset finance and want to know a little bit more.
Yeah, that's awesome. I'm just going to leave that up for 2 seconds and just in case anyone wants to capture that. But you're right, you can email Erin, you can reach out to me. Happy to pass on her mobile number for anyone that wants to chat through, or if you've got any scenarios at the moment that you're unsure of. Certainly being able to talk to, someone who has huge industry experience, not just in what they're doing now, it really can add a lot of value. And there's a lot of new brokers to market, or a lot of new introducers at the moment. And we're seeing, advisors and accountants and, everyone getting involved in lots of different types of funding, looking at balance sheets and seeing what assets are there and what can be possibly utilised to get that working cap that they need. So I really do encourage you all to take down Erin's details and reach out to her if you've got a scenario. But I will stop sharing because it's question time and there are plenty of questions for you. So, and I know that you've touched on a couple of them already, but it's probably more just a little bit of clarification. So we have covered off the minimum and maximum loan, which is great. So we've got that at 30 to sort of 1.5, but then if there's multiple products across the ScotPack range, then there is the ability to write even bigger transactions, as we saw in the case study. Yeah, cool. So we've got that one. So this question's interesting, and I might just get you to talk through it again around startups. Can they use, so it's a bit of a two-pronged question. Can they use assets that they already own in a startup for funding, or is it assets that are being purchased and they're trading for 4 to 6 weeks? Or, and this is the third bit, so I'm just, when you say questions and I'm trying to put them all into one. And then the third piece is around acquisition. Does that need to be assets owned by the business that you're purchasing, or can it be purchase of new assets due to the business that you're purchasing and what the requirements are?
So let's start with one. So I suppose collateral or top-up security. So that particular security needs to be in the borrowing entity's name. It can't be a third party. So if we're looking at a truck or another primary or secondary asset, it must be in the actual borrowing entity. Otherwise, it's considered third-party security. So yes, we can look at that. Top-up security, we look at a little bit different than a cash because it's a different risk, but it's not something something that we're open to looking at, but it's just got to make commercial sense for us to do that. What was the next one?
We had the startup question around can they use assets that they already own?
Yeah. So yeah, they can.
As long as it's in the company name, right?
That's
not
correct.
in the personal name.
Yes.
Gotcha. And then the last one was around that acquisition piece. So if they're purchasing, because you said it needs to be in the borrowing entity's name. So if it's an acquisition, I'm
so for an acquisition, they can. Yeah, this is where you would say, okay, well, we've got unencumbered assets in the current borrowing entity that you can leverage against. Plus, if you're acquiring primary or secondary assets, we can also look to fund those on the acquisition. So depending on the business, we can also leverage off their debtor book as well, which Max will probably touch on acquisition. So those two particular products work great. We can also look at the boost loan sometimes for deposits. So even if the client may have a deposit but don't really want to affect their cash flow, that's also another solution.
Yeah, got you. That's good. Yes. So I was going to ask you this question as well, but it's okay. Someone else has already got there. So you mentioned primary and secondary a lot. Is ScotPack playing in the tertiary space or not?
We only play in that space if it's an existing client with the debtor finance, but again, it's subject to the actual asset. So we mainly stick to that primary and secondary asset. That's probably niche.
Gotcha. And another good question. Is there an age of equipment for capital raises? So at end of term, have you got an age limit?
It just depends on the actual asset. So our full doc ready reckoners for the primary asset advise up to 25. Fast doc is 20, but capital raise is definitely a full doc. It just depends on the asset. So are you talking locomotives that are already 30 years, which have got a life of about 100 years, or you're talking a prime mover that might be 16 or 18 years old? We may only look a smaller term or a trailer. So it really depends on the asset to what your end of term will be.
Okay, cool. And is there an LVR on capital raises to value? Like, will you do 100% of the value of the asset, or is it lower when you're doing a capital?
We will look at the OLV, the liquidation value, versus the market value of the actual valuation.
Yep, brilliant. That's awesome. And I did hear you say this, but the questions come through, so I am just going to ask you again so that you can confirm it. So businesses can use existing owned assets that are in their business to raise capital to pay ATO debt.
Correct.
Perfect. And is there is that something where ScotPack would require to disperse the funds to the ATO themselves as part of the disbursement schedule?
So when we capital raise, it has to have a clear purpose, a CapEx purpose, a refinance, the likes of those. Working capital solutions, we've got debtor finance, business loans, which the team will touch on in later sessions.
Yeah, got you. Perfect. Tertiary. Are there any limitations on equipment so we're doing the dual piece, so the trade. So obviously Scott Packer funding that piece of equipment being imported under trade finance. And then that once it lands, then that's going to be converted into an equipment finance solution. So first, does it have to be an equipment finance solution with ScotPack? So will ScotPack fund the trade and then say, okay, and we've got the asset already elsewhere?
Our preference is not. I would rather do the asset finance. Let's be honest.
I'm sure.
I'm going to say no, but yes, we can. And Mags will touch on the trade. So yes, they can purely come to us to bring a goods in and then look to fund it elsewhere. But I'm here to support that if I can.
I love that. No, and why not? I get it. And I'm always just interested too because of, you know, and you're right, it's probably more on the trade side, which I can chat to Mags about, but you know, any of those delays or, you know, ships being stuck in port and, you know, all of those sorts of things. So I guess there's a fair bit of flexibility when both products are sitting under the one roof, right, to support the client.
Yeah, and I suppose exit. So if you've already got the asset finance with ScotPack, they see a clear exit. If you've got it somewhere else, you know, we're going to need to know the exit. And I suppose it's viewed a little bit different in regards to our risk.
Yeah, absolutely. All right, that has got through the questions that were there. So just if anyone's got any questions, now is the time as we wrap up and give you all a little bit of extra time back in your day. But Erin, you know, for our forum members that are either here with us today or will watch this through the videos that we upload on the forum pages, is there anything that you would like to sort of impart on, I guess, the new generation? So whether that's career change and you're in your 50s and you're getting into asset finance, or you're brand new and you know, you're young and you're coming out of uni or school, what are some of the tips that you would give someone wanting to work in this asset finance space?
I think any BDM has a lot of experience. So they've either, you know, worked for other institutions, industry, those sort of things. I think the women's network is very important to bounce off each other, asking questions, even counterparts. But I suppose it's been open to growth and learning and using each other as support while you're on that journey.
And you know, we all try and say it, but there is no such thing as a dumb question. And that's something that is really hard, right? Because we've all said it.
Yeah.
I need to ask you this, probably a really dumb question. And sometimes you don't mean a lot when you say it, but when you keep saying it over and over again, you know, knowledge is power. That's sort of a saying that's out there, but it's not actually power until you can use it.
Correct.
So until you get a true understanding, it's okay to know stuff, but then knowing how to implement it or how to use it or how to get the best result for your client is that next step. So, you know, I just always encourage everyone, you know, who's stepping into commercial finance and asset finance to, you're right, find a good BDM, find a couple of good BDMs, build your own little board around you that you know that you can talk to. And we all operate in that space where, Erin, I'm sure you'd say, hey, look, that's not a deal for us because the age of the asset's too old, but XYZ may be able to look at it for you, you know, and people remember that. And you don't lose business because of that. They actually come back to you because it's like, Erin, do you remember when you helped me with this? Well, now I've got one that I think is in your appetite. And so here's another one for you. Like, it's so encouraging when we see that shared collaboration across the market.
Yeah. And I actually see brokers grow. So when they're starting out and those sort of things, or starting on the full docs and their cash flow forecast from submission 1 to their 10th or 20th submission, and they fly straight through because you can actually see their growth and their learning along the way.
Yeah, absolutely. We are done. We're questioned. It's actually good. And we love giving people back time in their day. But certainly, you know, this has been super valuable. Really looking forward to, excuse me, speaking to the rest of the lovely women who are going to be presenting for this particular forum as well. So you're right, we've got Brooke and we've got Mags joining us, both Queenslanders. So there you go, Queensland represent. Yeah, absolutely. But Erin, it's been an absolute pleasure. It's been so nice to finally meet you face to face and have a bit of a chat before this session. And I can tell that you've got a wealth of knowledge that you're happy to share with anyone in our forum who would love to connect with you and understand a bit more about Scott Pack Asset Finance. Thank you so much for your time. Thank you for supporting the forum, Erin and Scott Pack. It's very much appreciated.
I really appreciate being invited.
Thanks, everyone. Enjoy the rest of your Wednesday, and we'll see you next week for session 3.